Hey everybody, welcome along to another video from Victory Trading. This time we're going to have a quick look at a very straightforward strategy that you can use and show you how to execute the trade. So let's have a look here. What do we have on the screen? We have a GBP JPY, which is one of the pairs this works quite well on. I usually trade it on the pound yen, euro yen, pound dollar, and sometimes euro pound as well, euro GBP. But I do enjoy trading this on the GBP pairs because it gives a bit of a better risk reward ratio. So let me explain what this is. It's basically a round figure rejection kind of thing. Okay, what do I mean by that? I mean that the price, generally, if it comes to a round figure, there's going to be a lot of buying and selling at that level, and we can take advantage of that and make some money. Okay, so you can see at the moment the price is currently at the 136 round figure. Okay, so basically this is a significant level in terms of psychology of price. So people are going to say, okay, oh, it's breaching the 136. I better buy now. As it's going above 136. Let's get on and ride this up. Other people are thinking, 136, I'm happy with that. I think I'll sell now. Okay, point being, there's a lot of buying and selling going on around these round figures, and we can take advantage of that to make a couple of pips. Okay, so usually with these pairs, the JPY pairs, you will notice a surge. You can see here it's at the 136 already. It's already breached it and gone up to the 0.07. So the point that I like to put my order in here, I'm going to take a sell order, right? So you can see the price is moving upwards. You can see from this red MA here, this is an 8 EMA. You can see the price is moving upwards. This strategy is basically a counter trend, basically short-term counter trend strategy. You can see it's jumping up there now. That's exactly what I said. It goes through the 136. People jump on board and try to follow it. Okay, so the point at which I'm going to count on a bit of a rejection and a short-term reversal is here, 136.30. Okay, so what I'm banking on here is price is going to come up to this level, and then it will basically reject at the 136.30 level, go back down. Okay, you can see it's halfway there already, just in the few minutes I've been talking. So we're going to go ahead and put the order in now. Let's have a look here. Okay, so we have a market execution. No, we want a sell limit. Okay, at 136. Oh, 136.30. Stop loss is going to be 136. Oh, it's a bit dodgy here on the app. 136.60. That's a 30 pip stop loss, and the take profit is going to be 135. I don't know what's going on with these apps. 135.80. That's a 50 pip take profit, 30 pip stop loss. Okay, you can see my volume there, 0.6. Up to you, whatever your volume may be. So you can see our order in here. We're looking for a jump up to this point here based on the excitement of the price breaching the 136, and then we're looking for a rejection back down this direction, back down to here. Okay, again, if it goes against us, we have our stop loss in place. at the 136.60. So you can see the risk reward isn't too bad, and the main thing being it's a very easy strategy to trade. All you have to do is keep an eye out for the round figures, breach thereof, and take a trade in the opposite direction using a limit order. Okay, so with the GBP JPY pair, I usually use the 0.30 as the entry point, and in the opposite direction. So if it was going down, I would take a buy at around the 70. And I'll show you another example here that you can see on right now. So you can see our price is coming down this way. It's coming down, it's breaching the 135 here, or the 136 down to 135. Okay, down, down, down. You put your buy order in at 135.70, which would be around here-ish, around there. Okay, and you can see now it's rejecting that area and going back up. So what I'm looking for now is the same thing to happen here. Reject and come back down. Okay, so try it out, guys. Let me know how you get on. Let me know what you think. Again, I use it on the JPY pairs and the GBP USD. With the GBP USD, I would have my entry wouldn't be as high above the round figure or as low below the round figure. I would use a 0.150 discrepancy. So for example, if it's breaching $1.30, I would put the sell at 130.150. So I put it at 30 here, 15 on the USD pairs. Okay, so I'm going to keep an eye on this here for the moment, and I'll get back to you shortly. Okay. Alright guys, you can see this is just a couple of minutes later. We're on the next candle here. Again, it's a 15-minute chart. You can see it's still climbing up towards the 0.30. As I said, there's generally a bit of follow through. Once it crosses a round figure, there's a bit of follow through, and that usually dies out around the 30. So hopefully we'll get taken into this trade now in a moment. Now you can see we're almost there. Beautiful. So we're in the trade now. Okay, and you can see the indecision is coming on there, and we'll follow it now and see how we get on. So again, is it going to reverse directly at the 30? No. Well, sometimes it does, sometimes it doesn't. You know, again, there's a pretty perfect example over here on the left hand side. So this would have been yesterday, because this is a 15-minute chart. Okay, so you can see what I'm talking about here. The price came up. You know, you would have been taken into your trade around here. You had a bit of pain there for a few candles, maybe a couple of hours of indecision. But eventually they kind of decided, nah, it's not worth over 136. And then it dumped back down to your profit target around here. Okay, so you can see here from, if you follow the crosshair, you can see from this point here, it started moving up. Okay, ran out of steam at around 30 pips over the round figure, slowed down, reversed back down, and that's exactly what we're looking for here. That's exactly what we're looking for. Okay, so let's go back to our trade here. We went up over the 136 round figure, put our sell limit in 30 pips over the round figure for a sell limit. Okay. Okay guys, you can see here this is a couple of hours later. Been a few 15-minute candles since we last checked in on the trade, and you can see it's going pretty well. So it's basically turned around at the exact kind of area where we would have liked to do so, which was 30 pips above the round figure, which you can see all around here. So we entered somewhere around here, took a little dip down in our favor, and then wasn't too sure, went back up again, didn't really go much higher. Then eventually the indecision and the kind of, I guess the false hype of the pair going up to the next round figure kind of wore off, and that's exactly what we're looking for, exactly what the strategy is based on. Okay, so it did come back down. You can see now we're almost at the profit target, which is 135.80. So I would be happy enough this will hit the profit target in the next few minutes, if not the next few candles. Again, you could tighten up your targets on these if you want. This is just what works for me, what I've kind of refined to over the years, my entries and exits with this particular strategy on this particular pair. So we would have different entries and exits on different pairs depending on the pair and kind of the average range of that pair, the daily range, the ATR of the pair itself. So for example, if the pair is a big mover, you're not going to be looking for 50, 60 pips. If it's a tight pair, you're going to be looking for, I don't know, 20 or 30. It just depends on the pair really. But just a good example of this one anyway, the round figure strategy. You get in above or below the round figure in the opposite direction that price is moving, and you take advantage of the indecision and the kind of the hype and the fear and stuff like that. Okay, so that's it. Check back in a few moments, hopefully when we're done. So, and now you can see, guys, the trade has been completed as per the plan. Pretty much a picture perfect example. So from our entry up here at 136.30, which was at this point here where the horizontal line is on the crosshair, well, around that area, okay, around here, and then price turned around as expected and took a dive back down the way it came. Okay, we got out here at 135.80, and you can see it's actually continued down a bit more since then. So it's easy for us to sit here and say, oh, we could have stayed in for longer. I don't really trade like that, to be honest. I like to have my predetermined exit with this, particularly with this strategy anyway. So I'm happy. That was a 0.6 lot size, which was small, obviously, just for the sake of the video. That would have netted about $28, I believe. Okay, so it's of course on a demo account just to show you how it works, show you the ins and outs of the strategy, the entry requirements. As we said, the price is coming up to have a taste of the nearest round figure. In this case, it was coming up from the 135s up to the 136s. So it went through. We got in above there because there will usually be a bit of hype as the price goes into the next figure. So it goes from 135 to 136. People start jumping on board on the hype and thinking, oh wow, nice, it's gonna keep going. The hype will eventually wear off up here, and there'll be a bit of a pullback and indecision, and that's exactly what we're looking to take advantage of. And again, this is a pretty perfect example of the strategy on this pair, GBP JPY. So as I said, I do use it on other pairs too, but I have different entries and exits on those other pairs. So this one I have a 30 pip above or below the round figure for the entry, so buy or sell in the opposite direction. GBP USD, I have a 15 pip above or below the round figure, and I do trade it on some other pairs, Euro, GBP, some of the CAD pairs it works quite well, but the entry areas are different on that, so keep an eye out on my channel. I might do some videos on those as well. Just one quick word of warning about this. It's not a one size fits all. Every time the price goes through the round figure, get in. No, that's not what I'm saying here. I don't recommend that at all. Okay, you need to use discretion. Mainly, the main thing to keep an eye out for is how many times has the price tested this figure recently. So what do I mean by that? Like you can see over here, up here, if you follow the crosshair up around, this would have been around sometime yesterday. a similar pattern played out. Okay, so our trade was actually the second time price tested the 136 round figure recently. Okay, so think of this like kicking down a door. So you kick it the first time, which is over here yesterday, nothing really happens. Kick the door, nothing really happens. Okay, kick it the second time, things are loosening up a bit now. The door is looser, and there's a good chance if you kick it the third time, you're gonna go through. All right. So what am I saying exactly? I mean, if it keeps testing the figure over and over again, I would say anything more than twice in recent sessions, I'd be getting more and more skeptical, and I probably, if this comes back up here again, I probably won't take it now. I'd be more interested in a buy to let it keep going. Like I said, it's like kicking in a door. You kick it once, it doesn't budge. Kick it twice, it's moving. Kick it three times, maybe you're going to get in. Okay. So there you have it, guys. I hope you enjoyed the video. I hope you can get a bit of use out of the strategy. Try it out, back test it, front test it, demo test it, whatever you like. And if you have any questions or concerns, or maybe some advice from me or whatever it may be, feel free to get in touch. So thanks for watching. Take care. Bye bye.